So how low would it go? We do the exact same thing as before. We go from the low up to the high where we entered, and it came right into the 836 again. So now we're looking to take profit and we go in for the buy. Right? So now we're in for a buy. And then we see, okay, where do we take profit? We go from the high, switch to a 5-minute time frame. We go from the high here down to the low. And it hit our 836 area again. See? So like when you guys practice this, something you can really milk. How long have we been were these examples? I think we got one trade, we sold, then we bought, then we sold, then we bought, then we sold again. So in all of these examples was, let's see, we would have sold here. So this was in 2 hours, 20 minutes. Wow. Not bad. 2 hours, 20 minutes, lots of trades. This is one of the reasons I love gold. You can buy, sell, buy, sell, buy, sell. Like proper scalping. And these are not small moves either, guys. So from here all the way down to where we did our first trade was 103 pips. Then we rode it from this low to this high was another 92 pips. Then from here to this low was another 79 pips. Then from here to here was another 70 pips. And we can keep going. So I don't know, that right there, maybe it's like, I didn't add it up, maybe 300 pips. It's pretty good. That's very good. So I love Fibonacci. It just keeps it simple. What else can I teach you guys? You remember back to Ishak's trading strategy, how he looks for multiple touches? I've been doing that as well, just to give some like additional reassurance. So let's say, okay, I'm looking to enter at this 836 zone, right? If I draw a horizontal line at that 836, do we get multiple touches? Okay, there was this zone that came down, it rejected. This zone here, let's say I'm looking to buy now, right? At this 836, you see it came up, touched, rejected. Here it came up, touched, rejected. Where else? Here, touched, rejected. So that's something that you guys can see as well. You'll often find that the Fibonacci is going to match up with multiple touch and rejections. So Ishak doesn't even use Fibonacci. He just does a whole bunch of lines, but it gets you the same result. You see? Is this making sense? Cool. Cool. Add Melissa, let me just see. This means we trained at this. We do not have to wait for Ben when it bounces back. This is more just an asset that you guys can either use to identify your own trades or to identify when to take profit from Ben's trades, or also where would be the best entries from Ben's trades, right? Because Ben typically will give a 40 pip range for entries. So let's say Ben is looking to enter from here to 40 pips would be there. This could be Ben's entry range. Okay, maybe we put one layer there. But I would definitely be putting a layer when it comes to my 836. You see, if Ben is giving me a buy. So that's why I'm sharing this with you guys. Is more if you guys want those really nice entries, when Ben gives a trade, you know what zones to be looking for. Right? And as you guys get confidence with this, maybe you do a bigger lot size here. Obviously within your risk management, right? But these are things that you can consider. Right now, it's all about just building your confidence. And then let's say Ben did give a buy in that range, right? So he told us to buy from here to, what was the 400? To there. How high can it go? Well, now we just mark up from the high to the low. Okay, based on Ben's trade, his TP1 is only going to be 15 pips. Maybe I look to ride it from here, at least up to the 0.5. That's right there, 40 pips. That's his TP2. Okay, high likelihood TP2 is going to be hit. Maybe, you know how Ben always does trailing stop loss. Okay, maybe I trail the stop loss to the 618. That's 50 pips. Maybe I do trailing stop loss all the way up to this 836, right? That's 66 pips. So this will just kind of give you a nice idea or roadmap of how far his trades are going to reach. It's an asset, and that's going to give you better risk to reward as well. Okay, because one thing Ben is very good at is identifying like the zones of where we should be looking to buy or sell. And then this is something you guys can add on to get the sniper entry, but also like some, let's call it sniper take profits. Yeah, we've been marking up this whole Fibonacci off of a 5-minute time frame. Right? 4-hour time frame is giving you more like the overall trend, guys. So, which I can show you guys, but it's not going to be, it's not something that you can take multiple trades a day. So based on a 4-hour time frame, what is this telling me? Is that gold is likely to keep coming down up to this zone. So 1978 to 1967, right? That's all the 4 hours is going to tell me. And then I can go in for a buy that'll carry out. I can really use a trailing stop loss, right? That's it. That's it. But if you guys really want to be scalping, which is what Ben does, because he gives like 5 trades a day, in, out, you know, then just stay on a 5-minute or 15-minute time frame for marking up your FIPS. Right? Like all this back and forth, we can be taking multiple trades. So, yeah. Eileen, Ian, what lot size are you using? Now I'm using 0.2 lot size across however many layers. But that the lot size is going to be proportional to your account balance, right? I believe it's not pinned in the second last tutorial, either the last tutorial, the second last tutorial that we held, that's recorded in the trading group that we have on Telegram. Towards the very end of that recording, you'll see Andy and I shared an image that recommends lot sizes for you depending on your account balance. So definitely check that out. Okay, Eileen? No problem. That whole tutorial is going to be worthwhile, but specifically in the end, we'll tell you about the lot sizes. We covered everything in that tutorial, multiple layers, how that works. Then we covered through Ben's trades. One question that I did receive over the week is why was Ben showing that he made, I think it was like 300 pips when he told us to close our profit, right? So I covered this previously a couple of times, but just so that you know, catch everyone up if you haven't heard this before. Ben and myself as well, we appreciate that everyone is different. Some people are going to want to take profit right at TP1. Some people are going to want to take profit at TP2. Some people are going to want to hold their trade and use a trailing stop loss. So Ben is just suggesting points depending on the type of individual that you are on where you may want to wish to take profit. That's not to say, okay, everyone close your profit now. So this is where I want you guys to be observing what works for you. Do you want to always go for TP1? Do you always want to go for TP2? Do you want to close your profit as soon as Ben says to close profit, right? Like the very first time that he says it. For the best risk to reward, it's TP2. But it's not every time that we hit TP2. So if you're going for TP2, then you probably want to break even, right? Set your stop loss to break even so that you're risk-free. There's no sense in a trade that has reached TP1 or it's approaching past TP1 for you to not be break even and risk free at that point, right? So these are things that you want to observe and identify what's going to work best for you. For some people, what works best is take profit one. Other people is just to really trail the stop loss. Okay. So that's why when Ben says close, it's not to say everyone should be closing. It's to say those of you that are happy with the profit, close your profit. And based on the Fibonacci, now you guys have an idea. You can paint a roadmap of, okay, Ben said close, but my 618 is all the way up here. Let's say we're going for a buy, right? My 618 is all the way up here. Well, what the heck? We'll draw it. So let's say we are this far, we entered down here and we're this far, and Ben says close. Okay, if you're happy with the profits, close. But then there's going to be some of you guys now that you marked up your Fibonacci and you say, hey, we're not even at the 0.5 yet. I'm going to hold this to at least the 0.5 or the 618. Or maybe you want to trail your stop loss all the way to the 836. Because it's a big difference, right, in profit. So this will just give you guys that the knowledge to actually be able to identify a roadmap of where the trade is heading. And it's also going to give you control over your emotions, because one thing that you guys will observe between each of these points, 236, 382, 0.5, there's often like a back and forth, right? So notice, okay, as soon as it came close to this 382, there was a pullback. Again, pullback. Broke above, and then it came down. It came close to 0.5, pullback. You see, 618, some minor negligible pullback. Probably some news or something happened here and it shot up. So one thing I'm experimenting with, which you guys are more than welcome to experiment and let me know your feedback. After each of these points, I'm looking to start trailing my stop loss. So this makes it easy for me. I don't need to keep looking at price or anything like that. As soon as we're in the next zone, so by zone, I mean, like, let's say this is one zone. Let's say this is another zone. Let's say this is another zone. As soon as price breaks into the next zone, I'm looking to trail my stop loss, right? Maybe I'll put in the middle of the previous zone. So as soon as we're in the 618, I'm in the middle of between this 382 and 0.5. See? So as soon as we're in this top zone, my stop loss will be right in the middle. It's literally right in the middle. As soon as we're between the 0.5 and 618, I'll put my stop loss right in the middle here. You see? So it comes up, but it doesn't ever hit my stop loss. And then as soon as it hits my 836, I'm out. By that point, I've made enough profit. I'm happy. I'm not going to keep trying to, that's already like a greedy point, you know? I don't need to be more. Just take the profit. So Fibonacci is a very nice asset. Yeah. I hope that helps, guys. Gives you some value. Very, very powerful tool. And that's it. See, like it's all over the place. I don't know if this is the one that we marked up, but I can see it even without drawing a fib. I think this was the one that we marked up. You see it hit our zone perfectly. Even here. So Melissa, you were asking for sells. Look, from here from this high to the low, there's another sell. From this high to this low, there's another sell. There's like, again, another sell. It's all over the place. Are there any others? This one, you see, it never pulled back. It never reached. So if I go, let's say we're looking that this was the point where we are considering it to go up. It never did. Yeah. So I would be disciplined. I wouldn't be entering here. I'd be waiting for it to come up. And if it doesn't, that's okay. Don't force an entry. Definitely not down here when you're waiting for it to go all the way up here. Yeah, it never came back up here. So at some point, I'd be waiting for price to come back up here and clear this liquidity. It's imbalance. So what does that tell me? Remember on the bigger time frame, prices should come all the way down to here. Well, likelihood, at the very least. From here, might have some back and forths, but then we come into this zone. Oops. Didn't mean to draw that. Yeah, we come into this zone. So what a move that will be. Wow, 683 pips. That would be like TP1. But you don't need to go all the way like greedy, you know? You can ride it. So this is what I'm trying to teach you guys here. Let's say it does this. And we'll end off with this, okay, guys? Let's say I kind of was a bit much here. Let's say it goes like that. This is the beauty of leverage trading. We don't need to ride one trade from here all the way up, right? We can ride one trade. This is a concept I had to learn the hard way. So I just want to try and give you guys this mindset stuff. You can ride a trade up to here, take your profit. Then you can ride a trade from here. You can look to re-enter, right? Ride a trade from here to here, take your profit. You're always building the account. Then you take a trade from here to here, take your profit. Then you take a trade from here all the way here. So what would have been just one trade from here all the way up here, you could have now gotten, 1, 2, 3, 4. So break it down. So keep that in mind. I learned that lesson the hard way. That's the whole point of these calls. Try and give you guys some shortcuts, if you will. All right. Okay, guys. I think that's a good point to end. I know Howard, the CEO, right, of Validus, he's doing some call now, I believe, on trading for like AI. It's going to be covering. So, that's some course that they're looking to create. I think I mentioned this in the last call. They're looking to create a course now in Validus of how to build trading bots. That's something I actually personally would be quite interested in. But yeah, I'll keep you guys posted on that. So if that's something you're interested in, jump on that session. Melissa was kind enough to post the whole schedule. Thank you, Melissa, and the Zoom link as well. So let's end there for now. Keep writing down any questions, any feedbacks, any observations you're having over the week with Ben's trades. I'll post the broker link for you guys as soon as possible. I'm just waiting on the link. And yeah, let's have a nice week. So thank you guys for taking the trades and taking it seriously. Have an amazing, amazing week.